Hi all and welcome to our weekly report. The week begins with a very light calendar on Monday. UK inflation report, hearing UK PMIs and Fed's Powell speeches are main point of interest on Tuesday. Bank of Canada Consumer Price Index, crude oil inventories and a new parliamentary vote on Brexit are all due on Wednesday. The main point of interest on Thursday is US GDP data release and Fed's Chair Powell speech. The week will finish on Friday with the release of China Manufacturing PMI data, Eurozone Consumer Price Index, Canada GDP and US ISM manufacturing data. Now, let's take a look at few markets. This is the intraday price action for dollar index. It appears to be forming a topping head and shoulder pattern with a neckline clearly defined with these lows. The main point of interest for this index is at 96 level. The price action is consolidating around that level at the moment. If we see a bearish pullback lower, the initial downside is supported at 95.66, followed by 95, 94, 90. Alternatively, if we see a breakout higher, which could be triggered by something that Powell says, or maybe that US GDP data release, and we see a breakout above this current resistance, then the stopping head and shoulder pattern would actually morph into a bullish continuation falling wedge or a pennant pattern, potentially indicating a breakout higher towards 96.44. End of day close above that level would likely negate the bearish topping head and shoulder pattern, potentially opening up the way for a retest of higher upside resistances towards these swing highs at 96.80, possibly even 97.20, 98. This is the intraday price action for euro dollar. Euro dollar appears to be going sideways, consolidating in this tight trading range around 1 spot 1343 level. We saw a breakout above last week's main point of interest at 112.90 level. Whatever dollar index does could possibly have an impact on euro dollar as well. So if we see a bearish pullback in dollar index, that could potentially indicate that euro dollar could spike higher, break above this current trading range and move higher above 113.40, and that would open up the way for a retest of 1 spot 14, possibly even 1 spot 15 to the upside, which is R3 in pivots, but also this swing high as well. Alternatively, if we see a bullish breakout higher in dollar index, that would quite likely indicate that euro dollar could pull back lower to retest that 112.90 level, which is the breakout level from last week. Confirmed loss of that level would appear to be quite bearish, opening up the way for the retest of deeper downside support towards 112.40, 112, possibly even 111.80 to the downside. The same logic applies for sterling dollar. This is intraday price action for sterling dollar. We saw a cable breaking out above 128.80, 129 level. That was the big level that everybody was watching last week, and spiked into this sideways consolidation range. This type of patterns normally appear to be bullish if they're found in clearly defined uptrending markets. But if we put it in the context of what we were talking about earlier about dollar index, bullish confirmation breakout above 1 spot 30.60 in cable could appear to be supportive of a additional spike higher towards 131.50, possibly even 132, 132.45. Alternatively, a dip lower and a loss, at least end of day closure below 129.70, would negate that bullish breakout and potentially target 129 initially as a downside support. Confirmed loss of that level would open up the way for a deeper retracement towards 127.90, possibly even 127 to the downside. Dollar Japanese yen, main point of interest, is still at 110. Dollar Japanese yen appears to be bullish. Yet again, we have to put in the context of what we were talking about with dollar index. But as long as the price stays above this current swing lows at 110.44, 110.50, bulls are in control, and potentially a spike higher above this current trading range would open up the way for the retest of initial upside resistance at 111.40, possibly 111.80, 112, 112.20 to the upside. Alternatively, a confirmed loss, an end of day close below 110.40, especially below 110, would negate the current intraday bullish trend and potentially opening up the way for a deeper retracement towards 109.80, 109, even 108.80 to the downside. This is the price for gold. Gold also appears to be impacted by what dollar does, because gold is a commodity that's trading in dollars. Now we are seeing something that appears to be a falling wedge formation. Gold still appears to be very bullish above this current breakout level. So this was our resistance for a very long time, a breakout and confirmation, and now if tested, that would be a newly found support. 1315, 1315. Bulls appear to be in control above that level. Initial upside resistance is at 113.30, 113.35. Confirmed breakout above that level would open up the way for the retest of these highs here at 113.46, followed by 113.50, 113.56 on the upside. Alternatively, only a deeper retracement and the end of day close below 113.15 support would open up the way for a deeper retracement to the downside, targeting 113.08, followed by 13.06, and then 12.96 to the downside. Lastly, let's take a look at crude oil. Crude oil from the intraday point of view also appears to be very bullish, as indicated by the sequence of these higher lows and higher highs. There was a breakout level here at 56. The price action appears to be currently capped by 57.50, 57.60. Only a breakout higher and the respect of this rising support trend line, and also multiple moving averages, and the end of day close above 58 would potentially indicate a spike higher towards additional upside resistances towards 58.80, 59.50 to the upside. Alternatively, a dip lower and a loss of this rising support trend line could open up the way for a deeper retracement towards 56, where bulls would also like to come in and engage, possibly looking for a oversold bounce back and a spike higher. Only the end of day close below 56 would negate this intraday bullishness, potentially opening up the way for a retest of 54.85 support to the downside initially, and then if this 56 level appears to be a resistance at that time, and the price moves lower, then that could only indicate a deeper pullback towards 54, 53, 50, possibly even 52 to the downside. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.